I'm Andrew Murphy, Co-Chief Investment Officer at Winthrop Wealth, and welcome to our first quarter 2024 market review and outlook. Today I'll review what happened in the fixed income and equity markets, and I'll discuss our outlook as we move forward. Please visit our website at winthropwealth.com to view the full written version, and to learn more about our total net worth approach, which combines both comprehensive financial planning and investment management. And now, let's get to the video. We'll start with the fixed income market. Yields increased across most of the treasury curve, as higher than expected inflation data in January and February lowered the forecast for the total number of Federal Reserve rate cuts this year. 10-year treasury yield increased from below 4% to about 4.2% at the end of the quarter. Short-term treasury yields, including the 3, 6, and 12-month, are still above 5%. But the Fed's latest projections forecast 3 rate cuts in each of the next 3 years. So once the Fed starts cutting the federal funds rate, short-term treasury yields should also decline. In other words, investors should enjoy 5% yields while they last, and look to lock them in while they can. So if interested, please speak with your advisor about our cash alternative strategy, which is designed for individuals or entities to invest excess cash in a conservative portfolio of short-term treasuries at potentially attractive yields. For intermediate-term bonds, the Bloomberg U.S. Aggregate Bond Index decreased by 0.8% due to the increase in the 10-year treasury yield. As a reminder, bond prices move inversely to interest rates and credit spreads. Going forward, intermediate-term bonds are still an attractive investment opportunity in our opinion, as the yield to maturity on the Aggregate Bond Index ended the quarter at 4.8%. The equity market rally continued in the first quarter, as the S&P 500 increased by 10.6% and ended at a new all-time high of 52.54. This was the second consecutive quarterly performance above 10%. After declining by 25% throughout 2022 and bottoming in October of that year, the S&P 500 has increased by over 50% since then. The market rally over the last 18 months was driven by evidence of disinflation, the economy, labor market, and corporate earnings all exceeding expectations, the Fed thinking about cutting interest rates, and the impact of artificial intelligence on profits and productivity. Performance over the last several years reinforces our belief in a long-term viewpoint, as markets can be incredibly volatile over the short term. Please see our client question on the principles for long-term investing. We'll also highlight that unlike the beginning of last year, market performance has been broad, with solid results coming from mid and small caps, both growth and value, and international markets. Additionally, 10 out of 11 sectors were positive in the quarter. Also, unlike last year, performance from the Magnificent Seven, which are some of the largest companies in the S&P 500, has diverged, with Nvidia as the big winner in the quarter, and Apple and Tesla lagging behind. Our short-term outlook has been cautious since the market began to run toward all-time highs late last year. We're pleased with the recent performance, but we know that market declines are common and a pickup in volatility is inevitable. For the stock market to maintain its positive momentum, we'll need another year of economic, inflation, earnings data that exceed already high expectations. In recent years, we've seen the market boom and bust several times, including 2017 into 2018, 2019 into 2020, and 2021 into 2022. We believe maintaining a cautious near-term outlook is prudent, but we want to make sure we are prepared to utilize any volatility as an opportunity to make lemonade out of lemons by tax loss harvesting, repositioning, and rebalancing. With the stock market at an all-time high, we believe this may be a great time to raise funds for any aspirational purchases you've been thinking about, or to review your target asset allocation based on your future goals and objectives. Please speak with your advisor to discuss implementing a plan. Our long-term investment philosophy is based on the benefits of staying disciplined, opportunistic, and diversified, while striving to mitigate fees, taxes, and expenses. In our opinion, adhering to a structured process and executing on all these components should help keep our clients on track toward pursuing their long-term objectives. Thank you for watching today's video. And please visit our website at winthropwealth.com to view all of our market commentaries and to learn more about our total net worth approach.